A buddy of mine just asked, how do I get started in the stock market? I want to become a millionaire someday, but I don't want to make any mistakes. Well, today in this video, we're going to talk about the top 5 mistakes that I often see new investors make and how you can avoid it so you can become a superstar and live your sweet life in the future. Let's get started with number 1 out of 5, which means you are a saver. Now, outside of your normal emergency fund, I do not recommend storing away cash in an everyday bank savings account. Guess what? A bank savings account only gives you anywhere from like 0.40 to, if you're lucky, 1.5% interest. That's terrible because if you think about it, inflation is why the bank savings account is so terrible. Think about it this way, the average inflation rate has grown at about 2.5%. And if you look at the last year in 2021, we are seeing an inflation rocket at currently 5.4%. So if you put your extra money in a savings account, that's kind of silly because you're growing at a rate of 0.4 to 1.5%. Meanwhile, inflation's growing at 5.4% or on average 2.5. Do the math. You're losing money by storing your money away in a savings account. Instead, you got to invest it. If you look at what the stock market has done over the last 50 years, it has grown at a rate of 10.9%. So the beauty of that is investing it into good quality ETFs and good quality stocks means that you're balancing yourself out. So don't be a saver, be an investor. Number 2 is don't be a gambler. Here's what that means. A lot of people jump into the stock market because they hear these awesome stories, but putting in your money into a company that you don't quite understand, or even worse, I've had people that said, hey, I just put my money into this company that just announced bankruptcy because I think that they're going to turn it around and they're going to go to the moon. That's not cool. They're about to go bankrupt. Or it's a company you're not really doing your research on. You're not really understanding what that company actually is up to. And before you know it, you're in trouble and the company's stock goes down and you're losing money for the long term, which is what we don't want. Now, I'm going to share with you a personal story that I went through because I think that failure equals success. You got to learn from people that have failed. And I'm here to be transparent with you guys on YouTube because I love you guys. The year was like 2008 or 2009 or something like that. And of course we had a financial meltdown, but I invested in the company. Get ready for this. Circuit City, ticker symbol CC, doesn't exist anymore. But I thought, hey, people still want to buy TVs in the long run. People want to buy computers. I was dumb and I just said, I like Circuit City because I buy my computers there. So I'm going to invest in that company. What a stupid idea, because what I didn't do is I didn't do the 10 smart steps. And the 10 smart steps would have shown me that, hey, this company's financials is in a ruckus. This is going downhill and it's very nerve-wracking. Oh, and by the way, I would have also realized that the up-and-comer company, now known as Amazon, was well on its way to continue to gain massive market share, therefore putting these brick-and-mortar companies out of business. So guess what happened? I had like 10 shares. I didn't have a lot of money back then. I had 10 shares of Circuit City. They went off the market. They went onto the OTC pink sheets, and I basically had junk stocks that were worth absolutely nothing. Do your research and make sure you're doing the right thing. Don't just invest because it feels good or you think they're going to do a good job. Take the 10 smart steps. I will link a video in the info card above that you can check out where I go over the 10 steps that I look at when analyzing a company. This is stuff that I learned in the past so I don't repeat my same mistakes in the future. Let's move on to number 3 mistake that I see a lot of new investors make, and that is puking on a roller coaster. What the heck does that mean? Well, you know, the people that throw up on a roller coaster, that's pretty nasty because they're like freaking out. They're going down the hill and they can't hold it in anymore and they just throw up all over everybody. Can this video get any more disgusting? Who cares? The issue is you sell on the first drop. You're all excited. Everybody's getting into investments and you're like, well, I don't want to miss the boat. I want to do this as well. So I'm going to take my savings out. I'm going to apply it to a stock. Hopefully you do your research on it and you think it's okay. You put your money into it and then the next day it drops down and you get nervous and you're like, oh my God, I got to cut my losses like ASAP. You cut your losses, which means that you're actually losing money. We want to grow our wealth to live our ultimate sweet life. And our ultimate sweet life, unfortunately, cannot happen tomorrow. It's one of those things that needs to marinate over time. If it averages an 8% growth in the long term, and you only need in your future about 4% to live on, think about it this way. You could live off of your portfolio once you build it up to a sizable amount. So you only withdraw 4% a year. Meanwhile, it's grown at an average of 8% or more per year. You're still earning money, and theoretically, you could live on that for a very long time once you build up a sizable nest egg. Now, number 4 and number 5 are big ones, but first we got to talk about what do you actually use as a brokerage app? Now, I've talked about this one before a lot on this channel, and that is Webull. I use the Webull app personally, and I've been using it for quite a long time and have built up a significant portfolio. Now, the reason I like Webull so much is because it has 0 commissions. You don't have to pay any commissions when you execute trades of stocks. And it has multiple investment functions. You can get single stocks, ETFs, you can trade options, you can get fractional shares, and even cryptocurrency if you're into that. This allows you to start small as a beginner, and then you can scale up as you learn more about investing and growing your wealth. So what I do, as I mentioned earlier, is I use my 10 smart steps to research ETFs and research stocks. And then what I do is I hop over to my Webull app and I look at their charts as well as their in-depth market data and quotes within Webull, along with watching the trading community function in the app. Now, what this does is it gives me a sense of not only what the actual reports are saying, but also what other users are seeing in the stock and ETF. So join me on Webull today. They actually have a special deal. I'll include the link in the description of this video. Sign up today and you can get 2 free stocks for joining Webull today. Your first free stock is valued between $3 and $300, and that's simply just for opening your account. And then the second stock you can get is valued between $8 and $2,000. And that is achieved by making an initial $5 deposit for your first investment. Now, this offer is valid between now and August 31st, 2021. But if you're watching after this date, still check out that link in the description because Webull often changes their promotions and you can see what they're offering at this time. All right, number 4 and number 5 are big. As I said, number 4 is you're only buying into hype stocks or into tech stocks. What you have to do, instead of listening to YouTubers and copying their stock picks that they think are hot, you have to do your own research. I want to empower you with the tools that you can do your own gut check. Don't just go with somebody's word. Make sure you feel good about it. And furthermore, make sure you diversify. You want to make sure that you have a nice angle on all the different consumer sectors, all the different opportunities within the stock market. Don't just focus on one. Sure, tech stocks are awesome. I have plenty of them myself. But outside of that, I also have things that, I have things as boring as bonds, my friend. Bonds. Boring, but it's a hedge against certain things that could happen in the stock market. I also invest in international companies. I have a wide variety because I want to keep that balance going. And then you can decide what percentages of your investments to put into all that different diversification. So everybody, including the YouTubers, always looks good in a bull market, which is what we're in right now. But we want to make sure that we're here talking to each other during the bad markets, which is called the bear markets as well. Okay, let's talk about number 5, which is probably the biggest one. This one just drives me nuts when this happens. We're going to call this profit robbers. Now, profit robbers, these are the crooks or the bandits that get away with profit and they miss the boat. So what I mean by that, these are people that are the opposite of those that puke on a roller coaster. They're not losing money. They see just a little bit of green. They see a little bit of profit on that stock and they day trade that stock and get out of it. And maybe they earn $5, maybe they earned $1,000, maybe they earn $10,000. Doesn't matter. They get out early just because they got a little bit of profit and they miss the long-term growth. Here's a great example. First of all, I'm going to give you another failure point on my behalf. This is Bitcoin. I bought Bitcoin and it was November 10th, 2017. Now, I bought Bitcoin and the price at the time was $6,346 per Bitcoin. So I had, because I only invested $1,000, 0.1576 Bitcoin when I purchased in. And then it soared up. And then I got excited because right around December 29th of 2017, only about a month later, it went to the moon at the time. And the price of Bitcoin was $12,839, which means my $1,000 investment in Bitcoin grew to $2,023, which means, yeah, I made $1,000 and that's pretty darn exciting, but I should have just held on. And, hindsight's always 20/20, but if I would have just invested for the long term instead of the short term, in March of 2021, Bitcoin set at $58,000. And right now, as of the recording of this video, it seems to be going back up, which means my value would have been worth $9,154. I basically gave up $8,000 of growth as a result of selling just because I saw a little bit of profit in the beginning. So the point is, when you invest, don't be a profit grabber. Think about it for a second. What is my ultimate goal? Do I want to build up a $1 million portfolio? Do I want to build up a portfolio that allows me to retire early? If it's big enough and it can support my expenses at that average growth rate of 8 to 10% a year, hey, I can take advantage of that. But instead, no, I'm going to chase a $1,000 gain or a $500 gain. Well, that's stupid because long term, what is that doing for you? Sure, you might be able to go out and buy something fancy today, but I'm looking forward to tomorrow. My future self is going to thank the present self for being so smart and holding on for the long term. So don't forget to grab those 2 free Webull stocks in the link in the description below. Here's a video that will help you with more personal finance. Here's a video YouTube thinks you're going to like. And until next time, subscribe, live your sweet life, and we'll see you on the next video.